Participate. Hi, everyone. This is Loretta Sernowski from Remax in Rocky Point, Mexico. Welcome to another episode of Living in Rocky Point. Today, I brought on a friend of mine that I've known for quite a few years that is an expert in his field because I get this question all the time. What are my options for buying property in Mexico? So today, we have Jeff. And Jeff, tell us a little bit about who you are and who you work for, and what your experience is.
Yeah, thank you, Loretta. I appreciate it. So I have been in the retail finance industry for my entire career. Can you hear me okay?
Yeah, it's great.
Okay, good. And we've actually owned multiple condos in Rocky Point since 2004. Our current condo we purchased in 2011. So we have a place at the Pinacate. And I'm just excited to be on the show. Thank you.
Okay, so let's get down to actually, you know what? Before we start that, you and I have known each other since 2016 when I moved to Arizona.
Yeah.
And you've been through some changes in your career. And tell us a little bit about where you are now, what company you are, and what.
Yeah, so I was a retail loan officer for the majority of my career, the last 15 years. And in 2023, I took the jump and came on the broker side. So I'm a broker owner. Myself and my partner, Michael, we have about 30 loan officers now. And we are licensed in pretty much the entire West Coast. So Oregon, Washington, California, Texas, Colorado, and Florida, California.
So what that means for people out there, if you are in any of those states, then Jeff can absolutely help you. Whether it's refinancing to buy property in Mexico, but also if you want to buy property in those states, then he's able to do the mortgage for you. Okay, so let's see let's talk about buyers looking to invest specifically in Mexico, specifically in Rocky Point. We want to talk about their different options. So let's talk about a HELOC first. What is a HELOC, and can they use that to buy property?
Yeah, if you have any properties in the United States that have equity, we can look at multiple forms. We can look at a cash out refinance, which is a full refinance. We can look at a second mortgage, which is a closed in mortgage, or we can look at a HELOC, which is the most popular. And a HELOC really is just a line of credit on your current home. So most of our providers will go up to 90%. So for example, if you have a $500,000 value on your house, an appraised value, we can, with the first and combined with the second, go up to $450,000. So, if there's a $200,000 first, we could do a $250,000 second, up to that 450 or 90% loan to value, and then you can use that cash either to purchase the property outright, or I know there's a lot of owners out there that will do seller type carry with a nice down payment.
Right. And so let's just talk about that, specifically about seller carry. That's probably, I would say, 80% of the property that's sold in Rocky Point is seller carry. Just because people just don't have that kind of cash laying around, especially, at this point, the world's a little uncertain. So a lot of people maybe don't want to take that big amount of cash out. But this gives them something an option to, number one, negotiate a better price, and number two, keep their payments a lot lower than if they were a five or 6 year term. And probably the interest rate is going to be similar, or what is the interest rate when you do a HELOC?
Right now, our interest rates, depending on credit, depending on loan to value, we're right around 8% to 8.75%. Now, HELOCs are tied to, that's with one particular lender. We do have more aggressive lenders that will do more kind of, lower FICOs per se. Those rates are going to be higher. But these are interest only loans, and they are tied to the Fed rate. So you have the Fed rate plus your margin, and that's how you get to that 8% to 8.25%. So, but that's typically where I'm quoting most of my HELOCs today.
Okay, and so let's do the math for someone here. So, let's say I wanted to buy a condo. I have $100,000 down, and I wanted a 10-year term. The property's 400 and say 20,000. So if I did an amortization with a longer amortization, but split that up, it's going to cost me about $3,500 a month for me to buy that property. And what would be the difference then if they got a HELOC instead? Do you know offhand? I know that's a lot of numbers.
Yeah. So, okay. So you're saying a $450,000 purchase, Loretta?
Yeah.
Is it the terms typically they're amortized 30 years, but then you have a 10-year balloon on top of that? Is that typically how it works?
And to get a 10-year term is it's very, very rare. Most people just want it to be paid out in 5 years. So, even if you have a rental income from that monthly payment is just a little bit too much for people to manage.
So the way that we did it, we only had like 100 grand left on our note, and we did 100,000 in 72 months. That's the way that we did it. And the owner was specific on a prepayment penalty because he needed that income, as he wanted to ensure that he had that income for his retirement, right? So
yeah.
But I have seen where they will allow a 30-year amortization with a 5 or 10-year balloon. Are they not doing that anymore? Or
They are. They are.
Okay. So I have some numbers up. So if I do a 450,000, and then what would be the typical, let's say you do a 200, are they requiring 50% down?
No.
When they're doing an owner carry, what's the typical down payment?
So the good thing about Mexico is people say, what's the typical, what's the regular? Yeah. There is none. So the great thing about it is when you hire an agent like me, I negotiate the best terms for you. And it's just like buying property in the States. If you meet some of their, you get a better.
You would say on average, they're going to want to see at least 100,000 down.
Yeah, I mean, it depends on the price of the property. Right now, it's a fantastic time to buy, just like in the States, because we have more inventory. The prices are also lower too. But let's just say, 100,000 is normal.
What's the average owner carry interest rate right
now? So let's say it's going to be anywhere from 5 to 7.
We'll use 6% then.
Yeah.
So a $450,000 purchase with 25% down, which is 112,500. Your principal interest at 6% is $2,000 a month. It's not bad.
That's with a HELOC?
That doesn't count the HELOC. So that's your principal interest just on your owner carry portion. Now,
Okay.
if you did $112,000 HELOC at, let's just say 8.25% interest only, that payment would be, sorry, I'm calculating this real quick.
No, that's okay.
And this is amortized over 30 years, so obviously. It's not going to pay it off in 10 years. That payment would be base loan amount, interest only. Let me just make sure. Do it on my phone as well. So to calculate interest only, just in case anybody wants to know, I could literally do it on my phone. I can do 112,500, 112,500 times 8.25%, 9281 divided by 12. So that payment would be $773 a month.
What?
Yeah.
Okay,
Let's
go back because this is a little too, it just doesn't sound, it sounds like it's too low to me. Okay, let's go. We got Jeff Keaton, my friend, who is an awesome realtor in Arizona in Awatuki. He's watching right now.
Nice.
So Jeff wants to buy a condo for 500,000.
Okay.
Okay. He has $100,000 cash to put down.
Okay.
Now the seller does not want to carry, so he's going to have to find the additional $400,000.
Okay, so then does he have equity in a home that we can pull that from?
Yes.
Okay. I would recommend in a situation like that to either do a cash out.
Okay.
Do you know would it be a primary or an investment? Do you know?
Like when you say that, you mean him buying it?
No. Would we be doing that loan on an investment property already or on a primary?
Primary.
Okay. And then, so all I would think.
Before we move on, what's the difference between if it's primary or investment?
So investment, you're limited at how much you can cash out. So depending on the type, you're limited to 70% loan to value.
Okay.
And and the rates are higher. With a primary, you can go all the way up to 80% loan to value, and the rates are lower.
Okay.
Yep.
Okay. So he's his primary, so he can do 80%, and he's got
And then, do you know what the value of the house is?
Let's say he's got a $800,000 house.
Okay. And do you know if it's free and clear?
Yes.
Okay. So let's just do a $400,000 on a. I'll run rates on that real quick.
Okay.
And to give you an idea, we'll just figure it's like 780 FICO or something. Actually, sorry, I should have.
No, it's okay.
Should have prepared this sooner.
Well, no, because I'm throwing numbers at you. So, I mean, to me.
Yeah, so I'm going to run, I'm running pricing right now.
Okay.
This is the benefit of being a broker because we have a lot of companies to choose from.
Yeah, that's great.
Okay, so $400,000 cash out. Oh, something's wrong. Hold on. 400,000 Um, why is it not giving me 6-1? You know what? I'm just going to throw a figure out right now. I'm just going to say it's around 6.75. And I'll try and run the rates here, but your principal and interest on that at 6.75 is 2250. Now we would need to add property taxes to that. We'd need to add the homeowners insurance, which are your escrows. So let's just figure each is an average of 150. Payment all in is around 2550.
So 2550. So just to talk about taxes in Rocky Point, I mean,
So this isn't taxes in Rocky Point. This is
oh,
taxes on the primary that they just did the cash out on.
oh, gotcha. Okay.
Yeah.
So 2500, you said?
It's actually, I switched it back to non-interest only. It's 2594 principal and interest, 2894 if you add taxes and insurance. So just figure 2900.
Okay. Now what's 62,000 divided by 12?
62,000. It's going to be right around $5,000, but it's 5166.
Okay. So just so you know, I have a rental, like a condo they have a very steady renter base. They're getting 62,000 a year in rental.
Wow,
Yeah.
that's fantastic.
Right. Now,
Yeah,
I always tell people if you want to buy property in Mexico and you need to have that rental income to make the mortgage payment, don't go down that road, because I can't promise you that rental income is going to stay the same. Things
yeah,
like COVID happen, the border closes happens, and the last thing I want is someone that's under financial duress. This
so one of the things that the owner, he's passed away. He was later age even when he sold it. He was the original owner of the unit in Pinacate, and they built those in 1996.
yeah.
And he bought at Esmeraldas, the really big, beautiful building. And at that time, back in 2009 or whenever it was, the rent, he had the 180-degree view, like gorgeous, all glass. And they really sold those on the fact that they would be rented 24/7 and would cover everything. He
Right.
sunk all of his income into 3 more properties. He had a property in Rosarito, which is in between Ensenada and Tijuana. He had that property at Esmeraldas. He had a property up in Prescott, and then he had the one in Pinacate, which he owned free and clear. And he said, Jeff, if I would have done it over, I would have just kept my Pinacate, because he ended up fire selling all of them because he couldn't afford them anymore.
Yeah.
So yeah, you got to make sure that you can afford that payment and you're not relying on that rent factor. Definitely.
Right. And I mean, it doesn't even have to be Mexico, look what happened to kind of the Airbnb world, as far as everyone was buying Airbnb property, and then the regulations changed and all of a sudden people aren't getting as much rent, or the market's flooded with Airbnbs. So, just like anything else, you have to be smart about that. So in your professional opinion, what would you say is the benefit of using a HELOC over, seller carry in Mexico?
I would say the biggest benefit is you have to be very careful if you have a balloon payment. You have to have an exit strategy. And we learned the hard way. We had our first deal was owner carry at 10% with a 10-year balloon. And as we started approaching that 10th year, we realized that our balance did not, because the interest was so high, our balance was very similar to what we originally purchased it for. And at that time in 2011, I don't know if I believe that's before your time at Rocky Point, but We had the bird flu. We had the whole narco wars were really big back then. And the values just plummeted, absolutely plummeted. So we had no way to get out of our, we did not have an exit plan, so to speak. So had we purchased that with our own money here in the States on one of our properties, we would not have encountered that issue, right? So we had to renegotiate with the owner. She wasn't the most friendly at the time. There were quite a few units in Pinacate at the time, which is doing a lot better now that we have new administration, that were behind on their HOA, a lot of delinquencies. We had a very corrupt administration, and that's all been cleaned up since.
Oh, that's good. And people, when I do write an offer on seller carry, they sign off on an amortization calculator that very specifically states what their balloon is. When people want to keep their payments as low as possible, but 5 or 10 years goes by really fast, and all of a sudden,
It really
like
does.
you have that same balloon payment that pretty much what you paid for the property. Yes, you've enjoyed it, but like, oh shoot, what do I do now? Like, where do I come up with $300,000?
Yeah, so that's why with this new property, I specifically negotiated and we had the wherewithal to pay off that loan in 72 months. I said I would rather pay more per month and not worry about a balloon and just have, and now we've owned that free and clear since 2018, basically.
Well, and also, on the negotiating side, your offer really is a cash offer in their eyes because they're not financing you. So the negotiation is going to be, you're going to get a much sweeter deal on that side.
Correct, 100%. If you're coming, and there'll be multiple sales prices based on the type of financing or offer, right? For
Yeah.
sure, definitely. And it really depends on the seller's situation. Some are like, hey, I'll take the additional income, but others are like, no, I just want out for personal reasons. We don't know what's going on behind the scenes. So it really
Right.
just comes down to the motivation from the seller.
Well, and at this point in time in Rocky Point, especially places like Las Conchas, where there is a lot of full-time people that are older and maybe like they're, moving some to the States or back to Canada because of health reasons or something, they only want cash. They only want cash. So, lots of times people say, oh, we have 100 down or whatever. I mean, this could open up so much more opportunities for buyers if they would explore this avenue.
Yeah.
So if I'm a buyer and um, I want to explore this route and I want to buy a property in Mexico, what are my timelines and what do I have ready? What do I have to have ready to give to you? And what kind of timeline do me as their realtor do I have to put on the offer in order to get that cash?
Yeah, so we're looking at about 30 days. So as long as what I would do, we would do a basic application. We could do a soft pull initially, just kind of see where credit stands. There's no
Okay.
commitment, doesn't put a hard inquiry on anything.
Okay.
We can look at financials. So if you're W-2, it's very easy. We just look at pay stubs and W-2s. We don't need tax returns. If you're self-employed, it's a little bit more complicated, but we're very seasoned with that as well.
Okay.
You know, we can look at all of those schedules and calculate that income. We usually are able to pre-qual someone in 24 to 48 hours as long as we have all the documents.
Okay.
And if they're like with the HELOC, if you're ready, we just get it submitted. All of our lenders are third party, but HELOC is a true third party in sense they handle everything. So we're there to guide, and be that guidance and collect docs and stuff. Whereas with our other lenders on a cash out, we're doing everything, right?
Okay.
So there is a bit of a difference, but the majority of our HELOC providers are 30 days or less, for sure.
Okay, so when I'm writing an offer with a HELOC, then I will want that contingency to be
Yeah.
at least 30 days.
Yep. Yep.
Okay, sounds good. And what about the interest rate? Like, we see interest rates climbing down. If I get a HELOC today that's, like you said, 8%, if the interest rates go down, does my interest rate for my HELOC go down?
It does.
It does? Okay.
It's a variable rate directly tied to the Fed rate.
Okay.
Now, for
So,
a cash out refinance, that is not the case. It's a locked 30-year fixed rate.
okay. That's for a refinance.
Correct.
Okay, so let's touch on that because would that be another viable option for people?
Yeah, so it really just depends on the overall financial situation. Like if somebody is sitting on a mortgage at 2.75%, I don't necessarily think it makes sense for us to do a full cash out refi. I would
Right.
piggyback that with an 8.25%, 8% HELOC that they can kind of focus on, hey, I want to pay this down early and then keep my initial low rate.
Okay. Is there, let's say that my property is doing really well on rental. What if I want to pay that off sooner? Is there
For what?
penalties? What, the HELOC?
No, there's no prepayment penalties. No. Now we do have products on investment properties that are like debt service coverage ratio, and those are very good products for someone that's like, hey, I don't think I'll qualify for this. We're really just using the rent status to qualify based on the equity and stuff. There's usually on those, there's a 1 year prepayment, but that's only on an investment purchase or an investment refinance.
Okay. Okay, sounds good. And let's talk a little bit about what's going on in the States as far as mortgages and what your predictions are. And
Well, I do think, there is a government shutdown right now. The majority of necessitated there are some things that we don't have, but as far as basic government operations, it's business as usual. We won't see any rates, in my opinion, will be flat. So like the BLS was supposed to come out with job data tomorrow. It's my understanding it's not going to come out because of the government shutdown. And those are the things that really drive the market. So we did have a decent day yesterday. So mortgage rates are not tied to the Fed rate, but as the Fed lowers rates and mortgage rates follow. So, but it's also based on inflation. It's based off of job data. We did have pretty poor job data yesterday, and that did improve rates slightly. Today we're flat. Tomorrow we'll probably be flat. Eventually, I do see rates coming down. The current administration wants rates to come down to drive the economy, to drive housing. So we are lower by a full point than where we were last year at this time. So we're in the low sixes, soon to be high fives, mid fives. And, maybe next year at this time we can be in the low fives. We'll see.
Yep. We'll see. And I've been doing this for 32 years. When I started, it was 18.
Yeah, for sure.
That's a long time ago. And it's just what it is because your rent is this much money and whatever. And you can rent, but we all want to, it's a much different feeling. It's a much better experience for your life when you actually own a property.
Yeah, and you're not as stable because it's really at the whim of the landlord. And if he's like, done and wants to retire and wants to sell all of his assets, all of a sudden that roof that was over your head is not there anymore.
or raise the rent, or say no pets are allowed, or whatever. No, you can't
Yeah,
paint that wall blue, or whatever.
right, which happens quite a bit.
Yeah, it's your place. So it's the same thing as property in Mexico. It's great to have your place that you can put your stuff in the owner's closet, lock it up, your swimsuit, your flip flops,
Definitely.
and still have some stuff. You know all about that because you have your own place. So,
Yeah. Yeah.
Jeff, for people that are watching and listening, how can they get in touch with you? And we will put this on the YouTube channel.
It's, you can, our website is forward.loans. It's not forward.loans.com, just forward.loans.
Okay.
And my email is jeff@forward.loans. Very easy to get it, or just Google me. Seriously, like I'm Jeff Ohm Mortgages, and I'll pop up. So
Yeah, and we'll be sending out a recording of this that's edited, so everyone will have that. And Jeff and I are talking about doing more business together here in the United States, because I love that he does.
actually helped one of your clients back in the day buy a property. I don't know if you remember.
Absolutely. And there'll be more to come.
Yeah.
Now I'm going to try and convince you to open an office down here.
I wish we had direct financing. It's,
right.
The one thing about Mexico is they're very consumer friendly. Let's just put it that way. So it's hard to have a mortgage company out there.
Yeah, of course. Many have tried.
Yeah. Yeah. So
well, it is the start of fall break.
Yeah, and we're looking forward. We'll probably be down there before the end of the year, definitely.
That sounds great. Thanks again, and have a great beer week. Take care.
Awesome. Thank you. All right.
Bye.
Talk to you soon. Bye.